What's up everybody, my name is Ale and welcome to my world of stocks. By the way, this is the series where we talk about my 3 largest stocks that I'm currently investing in, and what we do is we go over the recent performance and I give my updated opinion on how I currently feel about them. So it's kind of a monthly update on my 3 largest stocks. Now currently at number 1 is Disney, number 2 is Microsoft, and number 3 is Nintendo. But if you've been following the channel pretty much since the beginning of the channel, then you know that Nintendo has long been my number 1 largest stock, but it has now fallen down to number 3, and Disney has actually taken the crown as my number 1 largest stock. And Microsoft is currently at number 2, and they actually just barely made the list last month. They just barely made the top 3 list, so they've already kind of climbed a little bit as well ahead of Nintendo. Now we're gonna go over all 3 of them and the reasons why I'm still investing in them. But before we do that, can I please just ask you for a quick favor? Please leave a comment down below. Let me know which one of these 3 stocks you like the most. This is for Ale's World Consensus. Just leave a comment. If you had to invest in one, which would it be? I'll tally up the results and I'll have that for you guys in next month's video. It's just kind of a way of helping all of you know which stocks people are most bullish on. Now last month we had 23 subscribers vote, and 44% voted for Disney at number 1, 30% voted for Nintendo at number 2, and 26% voted for Microsoft at number 3. So kind of an even spread there, but something that did surprise me a little bit is that you guys are actually more bullish on Nintendo than Microsoft, which I was kind of surprised about, because I feel like most of my viewers are, from what I've seen from the type of comments you guys leave, it seems like most of you are very cautious investors, and Nintendo has been much more volatile than Microsoft. I mean, it's not even close. So I would have assumed that you guys would like Microsoft a lot more. Microsoft tends to be not very volatile at all. We'll talk about Microsoft in a little bit and we'll look at their charts and stuff, but they're not very volatile. Nintendo is much more volatile. And also Nintendo is a gaming stock, which by the way, you know, I feel like a lot of you have never even really thought about investing in Nintendo. So I was just honestly surprised that Nintendo came in at number 2. That was kind of surprising. But anyway, with that, let's go ahead and get started. Let's take a look at Disney, which is my number 1 largest stock right now. So looking at Disney's current performance, they're currently priced at $116 per share. Rounded off, we're up 8% in July, down 1% in August, and then we were up again this past month in September by 4%. So I'm really happy with most of our recent performance with Disney. Now, if you ask me why I'm still bullish on Disney, why I'm still investing in them, I think there's really 3 primary reasons that we can look at, but in no particular order. Reason number 1, we'll go with their past performance. Now, this is obviously a stock that has not blown anyone away with enormous gains. Year to date, they're only up 8%, and in the past 5 years, they're only up 80%, which is really not that much compared to some other stocks that have just like skyrocketed recently. But what this is a pretty stable stock that has been trending upward overall. And just a decade ago, they were trading as low as around $20 per share, but have since climbed by around $100, representing gains of around 500%. And I know that this was after a recession and during a very massive bull run, but still, you know, 500%, very good performance to be proud of, very stable performance, very nice upward trend, nothing to take lightly. But perhaps more importantly than reason number 1 is reason number 2, and that is because of their current valuation. This is a stock that is trading at very low prices. I know people see that share price, you know, over $100 and they think, oh, this is kind of an expensive stock. It's really not, and especially if you compare it to some other stocks that are trading, some very popular stocks that are trading at ridiculous valuations, and even when you compare it to what is likely going to be its biggest competitor in the near future. And that of course is Netflix, because of Netflix streaming service and Disney's upcoming streaming service, which we'll talk about in a second. Now, I did an entire video comparing Disney versus Netflix. You can check that out in the description below, so I'm not going to go into depth, but we'll just look at it, just a couple little things. Now, Disney has a trailing and forward PE that is incredibly low, considering that we've been in this massive bull run. The S&P 500 is probably at around 20, give or take a little if you look at a trailing versus forward, but Disney is only at around 15, and Netflix is as high as around 170 trailing and still around 90 forward, so that is massively higher. And even if the PE ratio is not your metric of choice, we've got some other ones to look at. Their PEG ratio, which factors in future growth, is only 1.5 versus Netflix at 2.3. Their PS is at 3 versus Netflix at 12, and their PB is 3.8 versus Netflix at 37. So it's not even close. Disney is really cheap now comparing it to the market, and especially way cheaper than what is likely going to be their biggest competitor in the near future in Netflix. Much cheaper. Now we know that Disney has many different segments and they operate in several different markets, whether that's making big blockbuster movies or operating their television networks or their first class world resorts and theme parks. But I think the biggest thing that most investors are paying attention to when looking at Disney is obviously their transition from licensing out a lot of their brands to something like Netflix to actually streaming it themselves. Now, we know that Disney is going to be launching their own Disney branded streaming service next year, and some people are calling it Disney Play. We'll just call it Disney Play to keep it simple. But Disney also has Hulu and ESPN Plus, which is something that I'm a little concerned about because I'm a little worried that Disney will find a way to screw all this up and put some content on one platform but exclude it from another platform. And that really has to do with Hulu versus Disney Play. I'm not so much worried about ESPN Plus because that's really just sports content. But the more I think about it, it has maybe grown on me just a little bit because we know that Disney Play will cost less than Netflix, so it should be a low entry point for new customers. And then they also have the opportunity to package, to bundle up some of these services and give more content to the consumer at a little bit of a higher price. So there could be some benefits there as well. Maybe, packaging like ESPN with Hulu or with Disney Play, or maybe just throwing everything together. That all still remains to be seen. I don't know how they're going to divide up content. But when looking at those different streaming services, I think a lot of people aren't really paying attention to Hulu and ESPN, but ESPN Plus is actually seeing a lot of success. It only launched a few months ago, and it already racked up over 1 million paid subscribers. Hulu also continues to see strong growth, growing from 18 million subscribers at the start of this year to now having over 20 million. And with upcoming original shows from Star Wars and Marvel that will have very high budgets, that will have actors and directors from some of their movies, that will tie into some of their movies. And then you also look at all the new content that they bought from Fox for around $71 billion. I think that there should be plenty of content to go around, especially between Hulu and Disney Play. I'm just worried that Disney will find some idiotic way to screw it all up, but I'm assuming that there's going to be enough content to go around. And speaking of those assets that they gained from Fox, we know that Disney also received 39% of Sky from that acquisition, and even though they recently lost their bidding war for the rest of Sky against Comcast, it was actually a good thing that they lost because they basically bid up the price. Comcast ended up paying around $40 billion for the rest of Sky, and then Disney still had their 39% stake of Sky, which they are actually, it's being reported now that they're selling to Comcast for another $15 billion. So not only did Disney not spend any more money than that already massive $71 billion that they spent on Fox, but they actually got some money back, and around $15 billion. And then they're also planning to sell another 22 of Fox's regional sports networks, so that should also give them some money back as well to help offset some of that recent really high spending. Okay, so that was reason number 2, their current valuation, which I consider to be pretty cheap, and their future potential when looking at their streaming services. Hulu's already doing well, ESPN Plus is doing well, and then the promise of Disney Play, we know that they're taking it very seriously with very high budgets for Star Wars and Marvel and things like that, so that should hopefully do well. And then the opportunity to bundle everything together at a little bit of a higher price if the customer wants that. Hopefully the choices, the options that the customer can choose from are good options, and hopefully Disney doesn't find a way to screw it up. But if they do it right, I think there's a lot of opportunity there. But now reason number 3 is that Disney is also a pretty good dividend growth stock. Now a lot of people don't really talk about Disney's dividends because the yield is a little low at 1.5, but they've actually increased those dividends for the past 9 years, and their payout ratio is less than 25%. So that means that those dividends are not only sustainable, but they can continue to grow them out in the future. So I think the combination of all those different things, their stable performance, solid performance, their current valuation, which I think is pretty cheap, future potential, and pretty solid dividends as well, all great reasons to be bullish on Disney stock. All right, now speaking of dividends, stock number 2 is Microsoft, ticker symbol MSFT. Now, I first started investing in Microsoft as a dividend growth stock, but the more that I've researched them, the more that I've learned about them, the more bullish I've become, and I just feel like there are so many reasons to be bullish on Microsoft, even without those dividends. But when looking at the recent performance, in July, we climbed a solid 7%. In August, we climbed another 6%, and then we climbed another 2% this past month in September, and currently the stock is trading for around $115 per share. Now, we've covered all the different reasons why I love Microsoft in previous videos, so I'll just kind of barely touch up on a couple of them. But one reason is definitely their stock performance is outstanding, probably one of the smoothest upward trends out there. It doesn't always jump up by huge amounts, but it also rarely dips very significantly either. And they're up 240% in the past 5 years and around 1,000% in the past decade. And again, they pay out a very nice dividend. The yield is only at around 1.6, but it's been growing for years. In fact, they just raised it last month by another 9.5%, and their payout ratio is less than 40%. So it should continue to grow in the future. But something that I rarely see people talk about with Microsoft is that dividends is just one way they reward shareholders. They also have a long history of buying back shares. In fact, in fiscal year 2018, they reduced their share count by another 31 million shares. That's pretty impressive. And when looking at their business, they're just an absolute monster. They've done so many things already. They're doing so many things right now, and they have tremendous potential in the future as well. They have Windows in the PC market, Office 365 in the business services market. Most of their apps and services are available in the mobile market. They have Microsoft Azure in the cloud and server market, Xbox in the console gaming market, Windows in the PC gaming market, Microsoft AI in the artificial intelligence market, HoloLens in the augmented reality market, and on top of all that, they're still expanding by acquiring other companies. They've already purchased LinkedIn for the professional networking market and even GitHub for the coding and developer market. So just looking at everything that Microsoft does, you might ask the question, does management have everything together to be able to make all those different segments profitable? And if so, by how much? Well, the answers to both of those questions are yes and by a lot. In fact, looking at their operating margins for their three primary segments, all are well into the double digits and then some. Their more personal computing segment is at 25%, their intelligent cloud segment is at 35.8%, and their productivity and business processes segment is at 36%. And when looking a little deeper than that, looking at revenue for their sub-segments and their different products, we know that in their last quarter, year over year, we had Office 365 was up 38%, LinkedIn was up 37%, and even Surface, which has really struggled in the past, was up 25%, and then gaming was up 39%, with Xbox up 36%, and then Azure, which is very important for Microsoft, was up another enormous 89%. So for everyone saying that the cloud market is too crowded, there's too many players, Apple, Google, Amazon's at the very top, nobody can compete with Amazon, I don't really want to hear that argument. Microsoft Azure was up 89%. They're doing insanely well. And the crazy thing of all this is that Microsoft is not expected to slow down anytime soon either. According to simplywallstreet.com, they still have a massive expected earnings growth rate of over 20%, which is well above the market's 16%. So when looking at Microsoft, the biggest bear argument that I often hear about Microsoft is that they're too expensive. And listen, I understand. I don't have their PE ratio on me, but it's probably like above 50 last time I checked. So, I get it. Microsoft is kind of expensive, but the way I feel about Microsoft is that I just feel like you get what you pay for. Microsoft is a company that has dominated in the past, dominate right now, and they will continue to dominate in the future. They're not complacent. They continue to acquire and expand and move into new markets. So the way I see it, Microsoft just has a really bright future. And don't get me started with gaming. We talked about gaming, I think, in the previous video with Microsoft and everything that they're doing with Xbox and how they're doing games as a service and all that kind of stuff. The gaming market, blowing up, and it's expected to keep blowing up in the next coming years. So I just see a lot of potential with Microsoft. Not even to mention the fact that I started investing in Microsoft as a dividend growth stock. But they just have so many other reasons to be bullish on them as well. All right, guys, and that brings us to last but not least, stock number 3, Nintendo, ticker symbol NTDOY. Got to be careful not to get teary-eyed because this has long been my #1 largest stock. They've since fallen from grace down to #3. But let's take a look at their recent performance. Now, we obviously had a horrendous June after they had a pretty bad performance at E3, but we've since recovered quite a bit. We're up 6% in July, up 5% in August, and another 1% this past month in September. So overall, pretty good recovery, but I'd be lying if I said that this stock hasn't been volatile, because it absolutely has. And I think a big reason why is because we're just not really used to seeing Nintendo trading at these higher prices. You can't forget that it wasn't too long ago that Nintendo's newest gaming console was the Wii U, and it was a colossal failure. So their stock was trading as low as around $12 a share just a few years ago, and since then we've climbed hundreds of percent. So if we want to keep trading at these levels and climb higher in the future, then I think there's really a few things that are going to need to happen. Now, if we look at the biggest reason why we're even here, this is because of the Nintendo Switch, their newest gaming console, a hybrid console, which has been a huge success. The console launched just last year and has already sold over 20 million units. But I think the biggest target that is going to really make or break this stock is Nintendo's projection of selling 20 million units in just this fiscal year alone. And the problem is that we've only sold around 2 million units in the first quarter, which leaves 18 million more units to be sold in the last 3 quarters. Now, quarter number 2 is already in the books because it ran from July through September. So now we're in October, and we're going to be waiting for Nintendo to release their earnings later this month to find out how we did during that second quarter. But if you ask me for my expectations, or what I think is going to come out of that report, I'm not really expecting much, to be honest, because we didn't have any major games being released during that quarter to help push Nintendo Switch unit sales. But I think what really matters is the third and fourth quarter. Now, the third quarter will run from this month, October, up to December, and then the fourth quarter will run from January to March, and that's where I'm expecting huge sales. Now, we're currently in the third quarter, and we're going to be getting a pretty big game every single month this quarter. In October, this month, we're getting Super Mario Party, which, I wouldn't say it's a huge system seller, but it is definitely a game that a lot of people want and has already been receiving pretty good reviews so far. Then in November, we're getting really the big game here is Pokemon Let's Go Pikachu and Pokemon Let's Go Eevee, which is meant to attract a lot of Pokemon fans, including Pokemon Go fans, which, by the way, Pokemon Go is just a mobile game for your smartphone, and it has already brought in over $2 billion in revenue. That's billion with a B. I mean, that is just insane. It's estimated that players spend millions of dollars every single day. I think one estimate that I saw was around $2.5 million every single day. That's incredible. And Pokemon Go is estimated to have been downloaded, I think it's between like 800 and 900 million times already. So it's getting close to a billion downloads. I mean, that's insane. And Nintendo is definitely trying to capitalize on that success. They've already started advertising the Nintendo Switch on Pokemon Go, basically by introducing a new Pokemon. Everybody was kind of freaking out, a new Pokemon in Pokemon Go, and it looks like that Pokemon will be available on the Switch version. So I guess you can get the Switch version and then you can transfer it over to the mobile version. I don't really play Pokemon Go, so I can't really comment on, if that will actually work or not, but I think advertising the Switch on Pokemon Go is has to be a pretty good idea. And then finally, we have Super Smash Bros. Ultimate, which we'll be getting in December. So basically that last month of the third quarter. And that game is going to have every single character in history, and it's already been very highly praised by anybody who has played the game. So then we're going into the fourth quarter, and all 3 of those big games are already out, and they will be helping push Nintendo Switch unit sales even further. So I think just in those last 2 quarters alone, we could hit that 20 million projection. And I'm actually not the only one who thinks that. A Japanese analyst from Ace Economic Research Institute named Hideki Yasuda says that Nintendo always gives conservative projections, and that he thinks the Nintendo Switch will sell 25 million units, so basically 5 million more units than Nintendo is currently projecting. And I'm inclined to agree with him, because we also have Nintendo Switch bundles coming out kind of in this holiday season. We're going to have a Pokemon Let's Go bundle that will have a custom Nintendo Switch, a Smash Brothers bundle that will also have a custom version of the Switch, and there's even a Fortnite bundle, even though Fortnite is technically free, but it's going to have some different perks that you can get within the game if you get that bundle. So with big games coming out right now, more big games coming out in the future, we know we're getting Metroid Prime next year. We're also getting another Pokemon game next year. Pokemon may be switching off every year between Let's Go and the main series, so we could be getting Pokemon games every single year to drive up sales even more. And then we also have the online subscription service, which just recently launched, which should be bringing in even more revenue at very high margins. I just think that there are several reasons to still be bullish on Nintendo. Now, there are many things that could go wrong. I covered a lot of my biggest concerns in another video. You can find that up here or in the description below. So if you're really interested in Nintendo, I would watch that video because I do definitely have concerns with Nintendo. But overall, I do see a lot of positives and a lot of reasons to be invested in Nintendo and to be somewhat bullish on them. But anyway, that's all I've got for you guys today. Those are my 3 largest stocks. Make sure you leave me a comment down below. Let me know which one, if you had to choose one, which one would you invest in? And if you hate all 3 of them, go ahead and leave me your reasons why. I'd love to read it and get your take on them. But anyway, thank you so much for watching. You guys have been very supportive lately. You guys have been hitting the like button a lot. It's really been supporting the channel, and I really appreciate it. I wish I could make more videos. A lot of you have mentioned that you want me to make more videos. I'm trying my best, but I have a job outside of YouTube, and it's just very hard to do so many videos on YouTube if it's not, you know, my full-time focus, if it doesn't get all of my attention. So I'm really just trying to build up YouTube. So anything you guys can do to help build up YouTube, you know, hitting the like button, leaving nice comments, kind of keeping me motivated, all that kind of stuff really helps a lot. So anyway, thank you guys for all the support. I really appreciate it, and I hope you all have a wonderful, beautiful day. Happy investing. I'll see you next time in the next video. Take care.